When you think about the tech powering your phone, car, or computer, it all starts with semiconductors. But before a chip is made, you need a foundation. Enter Siltronic AG. This German company, ticker WAF, is a global leader in hyper-pure silicon wafers, the essential base for every microchip. Siltronic doesn't make the chips, they make the flawless silicon discs that chips are built on. Think of them as the foundation of the tech skyscraper. Without their wafers, nothing gets built. These aren't just any silicon slices, they're engineered to perfection, forming the starting point for everything from AI processors to smart toasters. Siltronic sits at the very start of the semiconductor supply chain, making them a key barometer for the entire tech sector. If Siltronic is thriving, chip makers are ramping up production. If not, it's a warning sign for tech demand. Only a handful of companies worldwide can produce these wafers at scale, giving Siltronic a powerful, indispensable position. But they're also exposed to the wild swings of the semiconductor cycle, booms and busts. Right now their story is especially interesting. They've just posted strong numbers, but they're also warning of challenges ahead. Understanding Siltronic gives you a peek behind the tech curtain. Let's dig in. Let's talk numbers. In 2023, Siltronic pulled in $1.51 billion in sales, right at the top of their forecast. That's impressive execution in a tough market. More importantly, they posted an EBITDA of $434 million, with a margin of 28.7%. For every euro in sales, nearly 29 cents became profit before expenses, a sign of real pricing power. High margins like this show Siltronic runs a tight, high-quality operation. The real highlight? Their Q4 performance, $352 million in sales, and $89 million EBITDA, beating analyst expectations. While many expected a slowdown, Siltronic finished the year strong, showing resilience and smart management. This strong finish caught Wall Street's attention. It's one thing to have a good year, but sprinting to the finish line when others stumble is another. They found pockets of strength and capitalized, making 2023 a year to remember. But a strong finish doesn't guarantee a fast start to the next race. Let's see what's next. How did Siltronic pull off that Q4 surprise? It wasn't about selling more wafers, it was about selling better ones. They shifted their focus to higher value, advanced wafers, the luxury sports cars of the silicon world. These premium wafers command higher prices and fatter margins, especially for AI and high-performance computing. Not everyone can make these specialty wafers, but Siltronic leaned into this demand. By selling more premium products, they offset any weakness in lower-end markets. This is proactive management, spotting trends and pivoting fast. Even as demand for basic electronics softened, the hunger for advanced chips in data centers and EVs kept growing. Siltronic's focus on value over volume was the key to their Q4 success. It's a textbook example of finding growth in a mature market. By boosting their product mix, they increased revenue and profitability without needing to ship more units. That's how you win in semiconductors. Before you get too excited, here's the reality check. Siltronic expects a significant drop in sales and profits for 2024. That stellar EBITDA margin, it's headed lower. Why the sudden caution? Two words: weak demand and high inventories. Chip makers, Siltronic's customers, are seeing slower sales and are working through stockpiles built up during the pandemic boom. When demand cools, orders to suppliers like Siltronic dry up. This isn't just a Siltronic problem, it's an industry-wide cycle. Everyone's burning through inventory before placing new orders, creating a painful lag for suppliers. Siltronic is up front. Q1 2024 will be the weakest point, with hopes for gradual recovery later in the year. This is not the time for heroics. Caution is key. Management has the best view of the order book, and right now it's thin. The party's over. At least for now. Let's look at what's driving this cycle. The real villain in 2024? Inventory. Imagine stocking up for endless parties only for guests to stop coming. You eat through your stash before buying more. That's what's happening in semiconductors. Chip makers are sitting on mountains of wafers and need to work through them. Even if end-user demand picks up, new orders for Siltronic lag until inventories clear. This explains why 2023 looked great, but 2024 looks weak. Orders placed months ago are now drying up. Siltronic's weak Q1 guidance reflects this inventory burn-off. It's a cyclical, not structural problem. Demand will return, but timing is uncertain. The big question: how long will the hangover last? 1 quarter, 2, or more? As a supplier, Siltronic is at the mercy of customer ordering patterns. The key is having a strong balance sheet to weather the storm. In this business, you have to understand the cycle, not just the headlines. Here's the bright spot. Siltronic is investing in the future. They're building a massive, state-of-the-art factory in Singapore to boost production of advanced 300mm wafers. This bold move signals confidence in long-term demand, even as the short-term outlook is rough. The 2024 forecast doesn't include any sales from this new plant. It's all about qualification and testing this year. Real revenue from Singapore starts in 2025 and beyond. So, while 2024 looks gloomy, the new factory is a hidden growth engine. Siltronic is using the downturn to prepare for the next upcycle. When demand returns, driven by AI and EVs, they'll be ready. This is long-term strategic thinking. The Singapore investment is a bet on tomorrow's megatrends. Let's zoom out. Siltronic's long-term story is powered by unstoppable megatrends. First, artificial intelligence (AI) is everywhere, from data centers to your next car, and it needs the most advanced chips and wafers. This is Siltronic's sweet spot, as AI drives demand for their highest value products. Next, digitalization and electromobility. Everything's getting smarter and more connected, from homes to factories. The Internet of Things and the shift to electric vehicles mean more chips and more wafers. An EV uses up to 3 times more semiconductors than a gas car. These trends aren't going away. They're the foundation of future growth. Siltronic's new factory is built for this future, not just today's cycle. Once inventory issues clear, demand from AI, digitalization, and EVs will drive a powerful upcycle. Siltronic is positioning itself to be a prime beneficiary. They're building capacity now to meet tomorrow's needs. That's the kind of forward-thinking strategy investors should watch for. The future is bright, if you can wait for it. No investment is risk-free, and Siltronic faces real challenges. The biggest risk: the cycle. If the inventory correction drags on, 2024 could be even tougher. Competition is fierce, with major rivals like Shin-Etsu and Sumco fighting for market share. In downturns, price wars can hurt everyone's margins. There's also execution risk. Building a new factory is complex, and any delays or quality issues could disappoint investors. The market is counting on Singapore to drive future growth, so stumbles would be costly. Finally, geopolitical risks loom. Trade tensions or new regulations could disrupt global supply chains. Siltronic operates in Germany, the US, and Singapore, but no one is immune to global politics. These risks are real, and investors need to be aware. The semiconductor world is volatile. Know what you're getting into. But with risk comes opportunity. So, what's the bottom line? Siltronic is a tale of 2 stories. Short-term 2024 will be tough. Weak demand, high inventories, and ugly numbers for a while. If you can't handle volatility, this isn't your stock right now. But long-term, Siltronic is a best-in-class supplier to the world's most important industry. They're navigating the downturn by focusing on high-value products and investing for the future. The Singapore factory is a game-changer, set to power growth as megatrends like AI and EVs accelerate. The market's focused on today's gloom, but the real opportunity is in the recovery. If you believe in the megatrends and management's vision, the current weakness could be your chance. For me, I love a good pick and shovel play on a megatrend. And Siltronic is at the top of my list. Booyah!